The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White, the koala bear of Wall Street. And we've got a market that's finally moving. We finally broke one way or the other, and it's going to be interesting. We've got 1821.54 on the S&P cash. We have at least decent volume, starting the show with 2.5 billion shares, almost 2.6 billion shares on the consolidated New York Stock Exchange tape. If you listen to TFNN regularly, you may hear two volumes. One is the volume just traded on the floor of the New York Stock Exchange, which is regularly 600 or 800 million. The consolidated tape is all the volume for any stock listed on the New York Stock Exchange tape or the Amex. And wherever it is traded, it is the total number. 600 million out of 2.6 million is significantly, statistically significant. So whichever one you use, no big deal. I just have access and better access to the non-floor traded. It actually costs you more to get just the NYSE. But getting the total amount, not a big deal. But 2.5, a little over 2.5 billion shares. Normally we start the day right around 2.2 billion shares for this show. And of course, a lot of volume comes in at the end of the day, and that's what we're going to be watching for. As we let's start off with most shows out here, if I can actually get to it here, is to start with a little bit of history before we go knee-deep. Take the deep dive into the stock market and give it a little colonoscopy. Anyway, in 1932 today, the Reconstruction Finance Corporation is created under law by Herbert Hoover. The RC, funded with $1.5 billion, lends aggressively to faltering railroads and banks, as well as to municipalities seeking to finance relief programs and public works projects. It's just a drop in the bucket in the Great Depression. But their first TARP program in 1932 on this day. And I don't know if it ever actually made any difference. Everybody, I think they're trying to pull on the wrong string of the quilt of society instead of trying to make sure that things don't get out of control before it happens, and after it happens, like most politicians, they look for trouble everywhere, find it everywhere, and settle on the wrong solution. So as we're looking at here at the market, what happened? I've been talking about China and looking for disruption in China for probably several months, maybe even going back to the end of last summer when they had their first shot across the bow for the Shibor. We're familiar with LIBOR and the liabilities that a lot of the big broker-dealer banks are going to have because they manipulated that interest rate benchmark. The benchmark in China is called the Shibor. If you Google Shibor, you'll find a site and it will show you the spreads. But this has been going on for a little while now. It's not something new. We talked about the first company actually being allowed to go bankrupt in some of these wealth management funds in China. I think I talked about that yesterday. And the thought is now, with the bad numbers out overnight from China for their GDP, that they are more than willing to let their economy cool off rather than have just a ton of problems from the super rapid growth, from not being able to breathe the air in their capital city to raining down huge amounts of pollution on our west coast to everybody wanting to eat. And the food inflation, a big problem over there when you got 1.5 billion people. But they've got a lot of societal problems that have been caused by rapid expansion. Probably no worse than the problems they had from everybody just sitting around and starving and growing rice. But the economic issues, they need to really start cleaning up. I think probably at least some people on this side of the pond have been rather boisterous about them cleaning up and taking care of the problems before they end up in a Great Depression, causing probably World War III. Well, we see what's happening. But anyway, just even a small tick down. I think they were looking for a GDP of 7.8, and I think it came in at just a tick under that. Everybody went fairly well insane on that. What is this huge internet outage? Got a question in the den. What is the huge China internet outage? Basically, they've got a firewall around their country, and that firewall allows certain data in and out. Somebody at their firewall set it all and set the wrong IP address to a small house, if I'm not mistaken, in upstate New York. Where 2,000 of the biggest companies that China deals with outside the United States all got routed to at once. And that was pretty much it. If you put in the wrong number, you put in the wrong number. Interestingly enough, it was a small brick house, and I'm pretty sure it's in upstate New York somewhere. It's somewhere up east. I saw a picture of it on the news. This kind of a like 70-year-old lady trots on out and probably doesn't even have a computer, and she's wondering why everybody's so interested in her little house, being the head of, and it was just because someone put in one wrong number. There is a pit, kind of almost like a trading pit of a couple hundred people in China, and they always are monitoring the inflows and outflows of data. And if it has anything to do politically in nature or an opinion that someone has, that stuff's cut off pretty quickly. If they're downloading illegal software or movies, no one says a word. But someone just put in, one of those 200 guys sitting around the bullpen put in a wrong number in the firewall and suddenly redirected all those 2,000 biggest websites to one lady's house. And I'll try to find that during the article. Someone said it was in Wyoming. I saw a picture of that house, and I'll guarantee it was built in New England. It's they don't build small brick houses with 5-foot lot lines in Wyoming. And that's what it was. It was just a cute little brick house, probably a 2-bedroom, tiny little thing, but all brick. But you could tell it was done probably in the 50s or 40s, something like that, a little older house. But always interesting. So we're going to get right into the markets. And one of the interesting things I saw was the downgrade on Barrick Gold. I don't know if anybody's really talked about it too much. Very interesting to see just how many assets they continue to sell off. And I don't think while everybody's getting pretty hot on this. Let's see. Let's go at ABX, right? ABX. We'll take a quick look at it. Oh, guess if I actually typed in the right ABX. It's not doing all that bad comparatively for being downgraded and having to sell off huge amounts of its assets. But a lot of these gold companies, especially you look at this has not been a very, at least a particularly strong leg up for Barrick Gold. We've been watching the GDX, brought that up yesterday from one of the person's in the den, and we're getting awful close to that confluence levels. Let's see. There we are right there. You may not be able to see it easily on Tiger TV, but maybe you can. But certainly 2436 to 2448 would be what you were looking for at the top in the actual index to these gold miners. And I'd be watching that very closely as we get into that. Most likely, I would suspect tomorrow. Probably going to see this continuation into it, especially if the market weakens any more. I suspect we're probably going to see that as a top, short-term top, and then we're going to probably start seeing a pullback next week in gold. I thought maybe we would already have gotten up here and then pulled back already by today, but I also thought that the market would have rolled over probably Tuesday about noon, as weak as it was, that it took to today was rather interesting, but we're off 22 points on the S&P cash. Not the end of the world yet, but I suspect we are in a long-term trend that could be anywhere from 3 to 6 months long to go back and bottom out. Certainly seeing a huge move in the VIX today, and not surprisingly either. These levels don't stay that long. We're up to 1465. Up $1.81 on the VIX today, and we have to be looking at that very closely. Anytime we get below about 14 on the VIX, and you can find a stock with an implied volatility of less than about 30, you're almost always better off buying the option than actually buying the actual equity. Especially if you're going long. If you're going short, either way, certainly you've limited your loss going into the trade. And I'd been buying March puts on many companies for the last few days, and actually into today, and adding positions in the newsletter. But if you do get a market that moves down now, and you already have puts, and you bought them when the VIX was in the 13s or the 12s, I suggest you have one of the better positions, and you might want to think about sitting on your hands just a few more days before you sell them, because these things should be paying off very well if this is the crack in the market we are looking for. But I'm pretty much short everything. I got stopped out of one position yesterday. I went right back into it this morning, and it was probably already made all the money that I lost on my stop the first time. So it's not one of these things where I'm too worried about what's going on. A lot of times you'll have to get to be short. You may have to try a couple of times, but several of the stocks I got into were nice enough to give us a little bit of a bounce yesterday. Oh, back to the snooze. I haven't finished that, have I? Okay, Barrick Gold. Saw another article that was very interesting. It is about some of the experts calling about a tsunami of store closings in these larger malls. We've already seen JCPenney's looking fairly weak, and Sears, and probably going to be looking a little bit more at these store closings after the break. You can always give me a call at 877-927-6648 or email me at path@tfnn.com.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dive.
Well, we certainly have the opportunity to actually play that sound clip for the first time in a long time. We're off 21 points on the S&P cash. Feels like 100, doesn't it? Just to see anything. And, of course, reporters are all freaked out on the CNBC and Bloomberg's and all in the local news. It'd probably be one of the highlights of the news tonight, but certainly could see a market that had gone up against extreme resistance levels. Was very surprised that they could hang this thing out at the far end of statistics through expiration last week. But for the most part, I held my shorts and went through fairly well. We're seeing a lot of stocks that did do well early in their earnings come back down to earth. And one I got stopped out of for earnings is kind of ticking me off because it's back below its earnings date. But I'll find another opportunity first time to get it. But there's several other ones. If you are into the art of timing the trade charts, were a couple of very, very good Gartley patterns setting up. I actually got into one at $130. It's trading out at 126 right now, and I think this thing, this one looked like it could come back down to $100 or even $95 fairly easily. And got that in my newsletter, a couple others, but a lot of it's just an embarrassment of riches when it comes to shorts. Been getting a lot of emails from folks about stocks, and had a couple of them that, when you want to go short, you don't short the strongest stocks in the marketplace. You either short stocks that are highly out of proportion to their earnings or any kind of fundamentals, or you short stocks that are the cull the herd, like the African safari. I mean, you go out there and you find the weakest. You don't go looking for the strongest. You either find the stocks that are bloated and bubbled or fairly weak. And people wanting to short companies like Boeing that have orders for 600 or 1,000 planes out for the next 10 years. Let's say that they lose 200 of them. That means that they only have a 5-year backlog, not a 6-year backlog. Well, it's not any big deal for one of those companies. I want to find companies where something is dramatically changed, that their reason for being has changed. We'll say Barnes & Noble. Amazon comes along with an e-book, Kindle reader, and you don't have to go out and hang out at the Barnes & Noble anymore. Probably shorting Barnes & Noble, not a bad idea. Shorting a company where there's no somebody wanted me to look at a company that was a provider of guns and ammo and aircraft and stuff for the military. Those contracts go for 3 or 4 or 5 years, sometimes 20 and 30. This one made helicopters as part of what they do. And yeah, can they pull back? But this one was going to pull back maybe 10%. I mean, you couldn't make a real good case for it going in half. And if you're shorting a company, you better make a good idea that the thing is going to be blown apart. And that's why we were looking at, we've been talking about stocks that are pretty much are dead but don't quite know it yet, like Sears. Stocks that I'd like to be short in or get short would probably be things like REITs, with all these big malls, probably a lot of them going out of business. It doesn't take more than a few of these things to really put the hurt on these companies. And I was talking about all last fall, bringing up these REITs and showing how they were slowly being killed already, pretty much forecasting what was going to happen, I think, this New Year's. But if you're in a big mall and you lose Sears and you lose JCPenney, if you lose your big anchor stores, probably a good opportunity that a lot of the smaller stores will be evacuating the mall too, and eventually it'll just be a big giant parking lot. I actually drove through one of those on Sunday, and it's just, wow, really, this is a nice mall, except it's closed. All the anchor stores left, nothing much left there. And it's just kind of sad to see one of those big places go, but at the same time, our job is to make money in the markets. There was a good and decent decision in copyrights, and we'll talk about that when we come back. Then we're going to get into a lot of stocks and earnings tonight from Microsoft and Starbucks. Be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Pure energy.
Okay, I don't know what that is, but I'll tell you what it is not.
Under pressure.
Off 21 points on the S&P cash. We'll see a little bit of movement out here, but I think this is a clear and undeniable signal. We've now, in parlance of Wyckoff, jumped the creek or broken through ice, or any of the analogies you'd like. Volume is good, 2.75 billion shares as we go through this. And this is, we've had a couple of good down days with volume. Gone back up on a lighter volume. They continue to try to push these stocks just a little bit higher. And as Jesse Livermore did say, markets don't turn at the top on a dime. They are a slow cresting process. And kind of pulled back a little bit, went one more time at the top. Really couldn't get a lot of people to commit above 1845, and this looks like a fairly decent sell signal. But probably that 1845 level, if we got there again, I would probably pull the shorts that I have now. But I have a feeling we got a decent indication that only about half the stocks are going to actually make their earnings in the S&P 500 this year. We were talking about copyrights, pretty important ruling came through yesterday. Basically, a lot of what are called copyright trolls. These are movie theaters, or not movie theaters, but movie makers that probably didn't make a lot of money on their movie. So what they've decided to do is go out and sue people that have downloaded it using BitTorrent. Now, to this point, just because I have a wireless router at my house does not mean that I'm the person that illegally downloaded a movie. A judge agrees and says that an internet address is not a person. And therefore, just because you have an internet address, you would still have to prove that someone illegally downloaded it. And either a member, a guest, or a freeloader could engage in the infringing conduct. So there may be, this probably will be, from my reading of it, the end of these what amounts to frivolous lawsuits in going on it, and it's I've got it up here on the actual thing, but basically it comes motion to dismiss, and they actually got it to be dismissed. But if this stands, and I suspect it will, this will put an end to the movie makers out there randomly suing people at a whim, whether or not they downloaded anything illegally. But also makes it a little easier for people to do it. Anyway, several of the other organizations that were pushing this, AT&T, Cablevision, Comcast, are doing it and helping out the RIAA to get them off their backs, because they're saying, hey, you guys are enabling it. You make needles, and drug dealers use, drug addicts use needles, and so therefore you're responsible. So the whole thing of you make guns kill people, you make needles, and of course you can be used in a hospital or in a back alley, and if it's in a back alley, you're responsible because you make needles. So this whole guilt by association has been put on the major companies out there for the ISPs. They've been helping these movie guys for a while, but this may be the end of all of that. But pretty nice. We've got Andy chomping at the bit to go on. I think he'd come right on now. He's been in the den jumping up and down, pushing gold and silver in the den here, and yelling with his exclamation mark about how well gold is doing today. It is got a nice move out there today. But I'm just hoping that this isn't a Gallagher thing and I'm going to get some on me, because I have a feeling he's ready to smash some giant watermelons during his show. So you might want to put a glad bag over you if you're sitting in the first few rows there in the den today. Anyway, China's Ecuador refinery. China is going to put upwards of $10 billion into a refinery in Ecuador, and going to be getting a huge amount of the refined product back from them, and become a partner in this mega project. And I don't know if that's going to make a difference or not. Maybe he can bring that up during his show. And, of course, near and dear to my heart, the Privacy and Civil Liberties Oversight Board became an independent board from the government in 2007 as part of the Patriot Act. They put this in to overwatch and actually be able to see the data and what actually is happening. And they came out yesterday and said it does not provide adequate basis to support this program, and Obama's lying, and the NSI is lying, and there's no reason to keep the records and data and metadata, and in some case phone calls from every United States citizen that they can lay their hands on. But if you are looking for somebody that is independent, that was set up by the government to just look into this kind of abuses by the NSA, we do have the final word on it from the PCLOB, the Privacy and Civil Liberties Oversight Board, and they are basically calling the president a liar and the head of the NSA a liar, and saying that no terrorist acts have been actually up to this point and 10 years into the program because of it. So interesting. Jim Chanos was out today talking about share buybacks. And, of course, we've been looking at stocks like IBM. I didn't even look and check out IBM today. So busy shorting other companies. But I think this is a direct relationship with IBM, printing off $182.53 as we speak. But kind of an interesting take. And he says corporate CEOs with their massive share buyback programs are in fact investing in the stock market rather than expanding business opportunities at their companies. Either they expect higher returns from the market or lower returns in their business, or some combination of both. Given their questionable track record in timing the market, which is legendary, this may be a cause for concern, Chanos told the Wall Street Journal. So this is probably one of the premier short investors in the marketplace. There's a couple other people that have done better. There's a guy out now all over Organovo, ONVO, if you see that stock ticker pop up from here and there. My guess is he's got that one correct. I'm trying to remember the company that doesn't. He's another one that has spotted probably 20 frauds in the last 10 years. Chanos, of course, famous for getting and finding out about Enron. But he's had probably 10 or 15 since then also. But we're looking at him. And lastly today, HLF, we've got finally some traction in looking into multi-level marketing companies. It's off at $9.64. A lot of people are trying to exit stage left now that the bright sunshine of maybe a Senate hearing is ready to come around. And Markey from Massachusetts is asking for more information about the business in Herbalife. But all you have to do is use a spreadsheet, and you're going to find out that 87% of people that get involved in multi-level marketing, as it's done here, at least in the United States, will be losers, and they have to be. It is a mathematical certainty. About 13% of the people will break even or make money, and about 4 to 2%, depending on how it's set up, will actually be worth it. And, of course, those 2% are going to make a great deal of money. The next 2% are going to make okay. They could have just had a regular job, and the rest are probably never going to be worth their money. So about 96% of the people would have been better off getting a part-time job than spending a lot of time in Herbalife or any of the other multi-level marketing schemes out there. And the idea that you can buy soap or dishwashing liquid and be much better than Procter & Gamble, on the surface, pretty ludicrous. Maybe you could find some other things that need to be sold door to door, but I don't know. Those Avon days seem to be long past us. Maybe better in other emerging countries than here. But Amazon delivering things before you actually need them seems to me kind of interesting. Anyway, I wanted to get to right away to some of the stocks that we're going to be looking at tonight after earnings, and Microsoft was one of them. This thing broke above previous highs, been kind of rolling over after some discussions about what their earnings power was going to be. Did come right back down to its breakout level. People did buy it, and of course, if you're into the Wyckoff method of buying stocks, that is waiting for a breakout on heavy volume, which we had on the 25th of October in Microsoft. This thing broke out with 113 million shares. It came back into that, and as you came back into this breakout level, 59 million shares, 36 million shares, 40 million shares, 45 million shares, 41 million shares. The thing reverses, comes up on 44 million shares. Now, does that mean that this thing is over at this 3480 level, 3460 level? It does not. But you do have a decent level of support right here in this $34 level range. So you're probably not looking at this thing to blow out to the downside. Again, what is it, the 7th or 14th of April is the end of XP. People are going to be forced to upgrade. And even if they're forced to, I know people will hate it, but there is, out of the 450 million licenses for Windows, There's a couple 100 million of them that still are running XP. Those people will no longer be able to reinstall their operating system after April. So if you've got one that you're thinking is a little iffy, you probably want to slip that disk in, reformat the drive, and reinstall or do a clean install now before April rolls around. But, between that and the Xbox and some of the other software, probably most of the move from December all the way down through this range is just the natural retracement so far. I'm not expecting this thing to light everybody on fire. But again, with that many people that have to upgrade over the next year, this would not be one of my first choices to go short. Not enough money in it, either up or down, for me to get too interested. But of course, it's going to probably put a little bit of focus on technology and technology stocks between probably now and the next couple of weeks through earnings. S-Bucks is another one that will be announcing after the bell tonight. And if I actually taped it correctly. And let's see what we have here. If getting just a quick test here to see if what's going on here. I got to fix this. Anyway, looking at S-Bucks today. It's down 35 cents, so no big deal. And where are we looking at this thing to go after the earnings tonight? Looking at $70, there's a nice little gap down. That came up on high volume. That's where you'd be looking to buy this if it does come back with a lighter volume of the next week or so after earnings. But the gap up on 726 of last year happened on 16.1 million shares, and that goes all the way down to about $68. But if you were thinking about Starbucks, you're getting your wish. You're getting your opportunity to buy this thing at a lower price. I do not like the energy on the way back down. I think this is a little bloated. Maybe Andy will weigh in with the cost of a coffee going up, and maybe I'll get enough time one of these days to actually do a correlation between the price of coffee and how Starbucks is doing. But haven't had that much time yet. Starbucks is kind of a slow mover for me. I think there's a much better moving market out there for some other ones, but very interesting to see a correlation between CRE and the cost of coffee. Maybe you could do a pairs trade, long one, short the other. Other stocks of interest moving. We did talk about IBM a little bit. This thing having its big gap down and going kind of sideways here today. But we, just massive volume yesterday. Looks like it really will probably come back down to the 172s level. And wanted to look at a few others out here that were doing a little bit better. And see. Oh, we're going to break. We'll be back in just a minute. There we go.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
I don't know what that says. We were supposed to be playing the theme from Jaws to show some foreboding of my stalker who comes after my show on the Tuesdays and Thursdays. That's Andy Heck. He's typing up the den right now. We're talking about pairs trades, which is one way of putting on riskier trades. That's going long one and short the other, and figuring that there's some correlation between the two. And of course, the thought is with coffee going up, maybe that's going to be Starbucks undoing. But of course, tonight we'll have an opportunity to hear in their conference call what they say about coffee prices or input prices and how much that'll affect them. There's a few things that those conference calls actually do. And that is one of them. A lot of times they will talk about commodity prices and how they affect their businesses. But certainly interesting. Had a question about Jive software, which I don't know a great deal about and don't care about. It looked like it was headed down to zero when I looked at it during the break. I did want to bring up Facebook. Facebook, interestingly enough, popped down today a little bit on some news after the bell last night, and that is the ability to model Facebook users as if it were a virus. And apparently, I think it was maybe it was MIT, somebody else. I didn't get to really dig through much of it, but I was listening to a commentator as I was driving home last night about 9 o'clock talking about it in the news. And just from what he said about it, looked like they said that viruses spread virulently and then tend to burn out fairly quickly. They were trying to model the user base of Facebook based on influenza viruses and how they spread across towns and countries. And they said, amazingly, Facebook actually has the same kind of model as a virus. So going viral may not be as much of a stretch as you think, but their belief is that by 2015, at the rate that people come and leave Facebook, that you should start seeing the amount of users going off a cliff in less than probably a year, year and a half. Now, I don't know if that's exactly why this is down today, but it looked very interesting. Certainly not a lot of volume out here, and these aren't the kind of stories that have legs, and probably one day out here for what most people, if they were long, would call a hit piece. But it certainly, I think, has lost the coolness factor. The question is just, especially in the next earnings release, is how many of those advertisers stuck with them, how many that it actually worked for them. This is a new form of advertising. Just because they've gotten it well, is Twitter really taking over? I don't hear anybody really telling me too much about their Facebook anymore. Everybody's telling me about their Twitter account. Are these things just fads? Well, what can you tell? But I think certainly for me, it's never been anything where I wanted to put all my information. Maybe it's just I'm not the generation of people that thinks everything I have to say has some meaning for somebody, and everything I do. Maybe I have a small window in the stock market and in technology where I can add something to the discourse of humanity. Probably talking about what Sally Ann is doing with Bobby Joe, probably not so much. And don't you just have to be a little bit of a narcissist to believe that everybody wants to know everything about your personal life? It's almost kind of a little sicky. Even worse than anyway, high school girls talking about everything going on. Oh, here comes Andy. I can hear him. He's circling. He's got 3 barrels down. He's going to come back up. We get this in just a few minutes. Remember, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.